Algo Trade. This is Don Kaufman, June 24th, 2020, seconds after the cash close on this Wednesday afternoon with the S&P futures down some 73 handles. Hey, little volatility goes a long way. You know, looking at an intraday chart, first of all, what's kind of a tell here is we did not actually close on the session lows, which were ultimately right around 30.20. The other aspect that I want to discuss right up front here, 30.50 looks absolutely pivotal inside the S&Ps, but to see that, I would not look at like a 1 day, 1 minute chart. In this particular perspective, we're actually going to drop out to a 30-day, again, a 30-day, approximately 1 hour. And again, this is the S&P futures 30-day 1 hour. And I just wanted you to see the channel that we're trading inside of. Hey, maybe the, second, third time's the charm. Nevertheless, okay, breaking to the downside at this point would almost certainly mean a touch into the 29.83 gravity point. And that's one of the reasons I wanted to bring this up right now. Again, I kind of believe that the S&Ps are sitting at a fairly pivotal level. They closed off of some of the lows. And what I'm going to cover here in tonight's video is a little bit about, some of the good. I mean, listen, there are actually some positive things going on in the marketplace for those of you that are bullish. Some of the bad, I mean, again, some volatility obviously striking the marketplace. And then, of course, I'm actually going to allow you to look at a few of my positions, not only intraday, but a couple of my positions of how I'm actually positioned for what I perceive to be quite a bit of volatility and quite a bit of risk moving forward. So on some of these evening videos, I'm trying to give you guys insight almost every single time, okay, not to just what, an opinion is about the marketplace, but more importantly, how I am actually structuring my own portfolio around my belief of the marketplace, because I think that's what makes a difference. And it doesn't matter if we go up or down right now. It's, what are my positions? What's the P&L going to look like at the end of the day? So with that, let's kind of get to work here. So as I said, the S&Ps are down some 73 points. Am I a little bit enthusiastic? Listen, again, I'm carrying bearish positions. Any down day is going to be a good day. As I said, a little volatility kind of goes a long way. Now, with that, the gravity points are going to start to possibly come back into play. There's one real standout here, and if you look at just the daily chart, first of all, there's a 29.83 gravity point. I'll talk about that in a second. One thing that really resonates with me, the ranges on a day-to-day basis. They're huge, people. Forget just about today. The ranges that we've seen throughout the course, of some recent trade. Again, they're huge, people. I mean, you had some volatility to the downside here, some volatility to the upside, but the ranges that we're throwing off here, I mean, 100, 120 plus point moves inside of the S&Ps is kind of becoming a little bit of the norm, and you should be a little bit on edge. You should be nervous about the fact that we're throwing off such large ranges. Again, today's trade, I'll just put it, 30-20, all the way up here to roughly 31.20. That's good for 100 points. Some overnight ranges also. Again, it's just monumental size in terms of the ranges that we're seeing. Now, a break to the downside here. And I'm not big into market technicals, but a break to the downside, almost certainly the first stopping point over here is 29.83 inside of the S&Ps, and that happens to be none other than a gravity point. A drop down to 29.83 would signal that we're going to be back inside of a volatility box. That's when things get just downright nutty, people. Now, 29.83. One of the reasons I think it's pivotal, because in a day like this, we see some sell side activity. We can start to drift lower in the overnight session. We've seen some big ranges also in the S&Ps in the overnight session. Keep that 29.83 kind of in perspective. Now, that's some of the dark side, right? The S&Ps are heading down. Let me actually give you some of the more, I think, bullish kind of take on here. And I continually will hammer away until we actually see this. I'm going to bring up the financials. The financials today, are off. They're off big. They're down, 3.5%. And I cannot stress this enough. The financials are down big, then energy is down big. period. That's been the way this marketplace has gone. And by the way, everything is down. When I say everything is down, hey, if you haven't looked at the advanced decline line, that's what we call a full court press into the close. What that basically is, everybody's down. I know. There's always one in the group. It's Gilead. Anyway, the entire marketplace is down. But the reason that I'm kind of harping on this of what's down and what's not, so lately we've seen this kind of, heavy sell side activity into the financials, heavy sell side activity into none other than energy. But I want to remind you for just a second, I'm going to bring up the financials and I'm going to actually flip over here to a year-to-date percentage. And the reason I want to go to year-to-date, have you not looked at the financials lately? Okay, in terms of a major sector, they're down 26% on a year-to-date basis. You're like, okay, that's great. That's just wonderful, right? So they're down 26%. Who cares? Well, then you have energy. Okay, energy, say what you will, it's still a very substantial sector. Okay, energy plus financials, that's actually larger than technology. All right, here we have energy down 38.7%. Okay, so where am I going with this? I'm going to tell you exactly where I'm going with this. Right? You want to see the bullish take of today? The NASDAQ, okay? The NASDAQ, which is, here I'm looking at the NASDAQ future. The NASDAQ future is still up 12% on a year-to-date basis. Once again, I want to hammer the bottom line of what I'm getting to. And by the way, I prefer to look at the Qs. The Qs still up about 12%, but they're great for percentage movement. What I want to really get at over here is, okay, if you're sitting there thinking to yourself, is this the big sell-off? Is this, because we're all sitting here and we're like looking at the fundamentals, the jobless numbers, and you're like, it's just got to be the Fed, but you're so uneasy if you're bullish. If you're looking at it and saying, is this the big sell-off? Is this the one we've been waiting for? And the answer is absolutely not. This is not a big sell-off. This is a little bit more volatility. Again, a little volatility goes a long way, right? Why is it not the big one? Because the NASDAQ didn't lead it. And I'm telling you right now, and I'm going to tell you again and again, okay, the NASDAQ has to actually lead us to the downside. Why? Okay, because that's the sector that has to get killed for the S&Ps to actually progress to the downside. In a marketplace, and I say this constantly, there are things that you know and there are things that you do not know. Okay, what do you know? You know that the financials have already been like bruised and beaten, right? Energy, bruised and beaten. You want to look at like emerging markets, they're faring okay. They're down some 12%. Where else are you going to go? Huh? Oh, you're going to go over here to like consumer staples, maybe consumer discretionary. Even consumer staples, which is supposed to be holding up, is down some 7%. You have to understand that the only linchpin like in this marketplace right now, okay, the only thing holding this marketplace up is ultimately the NASDAQ. And when we start talking about the NASDAQ, okay, there are now 7 stocks that account for 50% of the NASDAQ. So when you look at the NASDAQ, you don't have to go very far. Let's just count 5 of them. They're Microsoft, Apple, Facebook, Amazon, Google. That's it. Okay, that's all she wrote, people. Those are the stocks that are going to influence us. And it's one of the reasons that I've said, like, listen, I'm taking bearish positions right now. I don't mind showing you my delta. I'll show you everything. Okay. I think it's important. Here. Okay. This is P&L. What does P&L look like on a decent down day with the S&Ps ultimately selling off by the tune of about 2.4%? On this one account, I'm up just 9,600 and change. Okay. But let's actually total up some of the accounts and actually see what kind of damage we have here. Net. I'm up about $14,000 on the day. Now, I don't bring this up, okay, to look at anything other than, P&L for like, the variance of a given day. But here's really what I wanted to show you. It's not about profit and loss. And I'm just going to isolate to my one account. By the way, this account is my IRA. It's an IRA. The reason I wanted to bring you this, okay, is I constantly discuss the fact that, I'm bearish, and I don't mind saying that, okay? So I carry some bearish positions. Great. I think everybody knows that at this point. One of the things, though, that I want to point out is that with those bearish positions has to come some viable risk reward. Now, forget about risk graph. I don't need no stinking risk graph. And I'm going to close up this left side bar because what we're doing here, and this for some people that are a little bit new, okay, I'm just going to take you through some of the methodology here. and show you exactly, well, what we are looking at. First of all, I've taken my positions in the analysis tab of Thinkorswim. I have beta weighted those positions, okay, to the spider. Effectively, what I've done is I've turned my Apple deltas and Caterpillar deltas and Costco deltas and CSX. I've taken my entire portfolio and aggregated it to one delta. That delta is the equivalency, okay, of SPY. So in this, when I say in this, okay, in this one account, I'm short the equivalency of 1,400 SPY deltas. Now, if you don't get the whole delta thing, fine, don't worry about it. Look at the P&L. Now, this is today, okay? The P&L. The P&L is bouncing all over the place here, but the P&L. What I want you to see is that's the P&L today, and then there's a P&L if we go up 10% or down 10%. Remember, I'm bearish, right? I want the marketplace to go down. I'm carrying negative delta. So if we go down 10%, I'll make about 54,000. But if we go up 10%, I'm only going to lose, what, 22,000. Okay? Is your risk reward viable? Is your risk reward viable? And then I'm going to take this even a step further. I like to come in here and kind of total everything. Okay? And I'll total everything. When I start totaling everything, listen, I have to uncheck. I have to uncheck like some of these micros because some of the micros don't necessarily have a beta associated with them. But I want you to see what I mean. Okay. And by the way, I've got futures trades on here. I have stock trades on here. I have option trades. But everything kind of accumulates together to in the neighborhood of about negative, 1,800. If I actually added some of those micros in there, net, I'm actually short the equivalency of about 2,000 shares of the spiders. But, okay, I have the P&L working in my favor. If we're to sink quickly in this marketplace, I'll be up 70,000. If we actually rally huge, I will take a loss. But that loss, okay, is going to be what? But half of what I can possibly gain. Is your risk reward viable inside of your portfolio? And I think that's a critical thing to ask. So again, if you're kind of asking that question, is this it? Is this marketplace going to break? As I said, I think we're kind of at a pivotal area of 30.50. How ironic that we just closed on 30.50 then too. But a very pivotal area. But again, if you want to know if this marketplace is going to get decimated, you're not going to see the NASDAQ outperforming the S&Ps on a given day, right? All the signs, the marketplace is poised for a big sell-off. It has been poised for a big sell-off. I mean, look, the volatility of the volatility, it's the VVIX. The volatility index is actually up another 5% today. You've got the VIX sitting at the 33 handle. Listen, we're ready to rock. We just have to see the NASDAQ get absolutely decimated. All right, last thing I want to mention over here is positioning myself. So the SPX expected move to the downside. Ironically, the SPX expected move to the downside this week happens to be none other than about 29.84, 29.85. The reason that's ironic is the SPX expected move happens to correlate right to a gravity point, which is 29.83. And for Friday, I'm just letting you know, this is not a trade that you have to do, but for Friday's expiration, let me knock this down in terms of strikes over here. Okay, for Friday's expiration, inside of the SPX, I actually laid a nice big $10 wide butterfly right over the 29.85 level. So if we're going to come down to 29.85, I'm going to be somebody. Listen, it's a lot to think about, but we want to see some follow through in terms of the volatility to the downside, specifically inside of the NASDAQ. Again, prepare yourself. This is not going to be a slow Thursday or Friday. We're going to be rocking out there. Thanks, everybody, for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.